Are you tired of paying too much in taxes every year? Want to keep more of your hard-earned money in 2025? Stick around because I'm going to show you proven strategies to save big on your taxes. You don't want to miss this. We all work hard for our money, and the last thing we want is to see a huge chunk of it going to the IRS. The good news is, the tax code is actually set up to help you keep more of your money if you know how to play the game. In this video, I'm breaking down 7 powerful tax hacks that could potentially save you thousands of dollars. These strategies are simple, easy to understand, and most importantly, completely legal. So grab a pen and paper, get ready to take some notes, and let's dive right in. The first and arguably easiest way to lower your tax bill is by maxing out your retirement accounts. Think of it like this: the more money you put into your 401k or IRA, the less of your income the IRS can tax. In 2025, you can contribute up to $23,000 to your 401k. That's like getting a guaranteed return on your investment before you even invest. And if you're 50 or older, you get a bonus. You can contribute an extra $7,500, bringing your total to $30,500. But what if you don't have a 401k through your employer? No worries, you can still take advantage of tax-advantaged retirement accounts with an IRA. You can contribute up to $7,000 in 2025 or $8,000 if you're 50 or older. Now I know what you might be thinking. But Graham, I need that money now. I can't just lock it away for retirement. Listen, I get it, but trust me, your future self will thank you. Plus, the tax benefits alone make it worth considering. We're talking potentially thousands of dollars in tax savings each year. That's money you can use to invest in other areas of your life or just keep more of your hard-earned cash. Remember, this is one of the most powerful and straightforward ways to reduce your taxable income and set yourself up for a comfortable retirement. Don't sleep on it. Alright, moving on to tax credits, and let me tell you, this is where things get really interesting. Unlike deductions, which reduce your taxable income, tax credits directly reduce the amount of tax you owe. It's like getting free money back from the government. One of the most valuable tax credits is the child tax credit. If you have kids under 17, you could be eligible for up to $2,000 per child. That's a potential $4,000 in savings for a family with 2 kids. And it's not just families. If you're a student or paying for education expenses, you might qualify for the education credit. This credit can be worth up to $2,500, which can make a serious dent in those tuition bills. For those with lower incomes, the Earned Income Tax Credit, EITC, can be a game changer. Depending on your income and family size, you could get back thousands of dollars. We're talking about putting real money back into your pocket. The key here is to do your research and see which tax credits you qualify for. Don't leave free money on the table. There are a ton of different tax credits available, and you might be surprised at what you're eligible for. Remember, these credits are designed to help people from all walks of life, so take advantage of them. Calling all entrepreneurs, freelancers, and side hustlers, this chapter is for you. One of the biggest advantages of being self-employed is the ability to deduct business expenses. And trust me, there are a lot of them. Let's start with the home office deduction. If you have a dedicated space in your home where you work, you can deduct a portion of your rent or mortgage interest, property taxes, utilities, and even home insurance. That's right, a portion of your housing costs can be written off. Next up, mileage. Every mile you drive for business purposes is deductible. Keep track of those trips to meet clients, attend conferences, or even pick up supplies. Those miles add up quickly, and you can deduct 65.5 cents per mile driven for business in 2025. And we can't forget about those essential business tools. Your phone, internet, computer, software subscriptions. If you use it for work, you can deduct it. Keep those receipts organized because every little bit helps. The key to maximizing these deductions is to keep accurate records. Use an app, a spreadsheet, or even a good old-fashioned notebook. Just make sure you're tracking everything. Remember, as a business owner, you're entitled to these deductions. Don't be afraid to claim what you're owed. Let's face it, healthcare costs can be a major drain on your finances. But did you know there are tax-advantaged accounts specifically designed to help you save money on medical expenses? I'm talking about health savings accounts, or HSAs, and flexible spending accounts, or FSAs. Let's start with HSAs. These accounts are like a triple threat. You contribute pre-tax dollars, your money grows tax-free, and you can withdraw it tax-free for qualified medical expenses. It's a win-win-win. In 2025, you can contribute up to $4,150 for individuals and $8,300 for families. That's a significant chunk of change you can shield from taxes while also covering your healthcare costs. Now, FSAs are similar to HSAs, but there's one key difference. You have to use the money within the plan year. However, FSAs offer more flexibility in terms of eligible expenses, including things like dependent care. Whether you choose an HSA or an FSA, these accounts can help you lower your taxable income and make healthcare more affordable. Talk to your employer or a financial advisor to see which option is right for you. Remember, healthcare costs don't have to break the bank. With a little planning and the right tools, you can save money and stay healthy. For all my homeowners out there, listen up. Owning a home comes with its own set of financial challenges, but it also comes with some sweet tax breaks. And we're not talking about small potatoes here. These deductions can save you thousands of dollars each year. First and foremost, we have the mortgage interest deduction. If you have a mortgage, you can deduct the interest you pay on your loan. And let me tell you, in the early years of your mortgage, that interest can be a significant expense. This deduction alone can save you a ton of money come tax time. But wait, there's more. You can also deduct your property taxes. With the SALT deduction cap at $10,000, this can make a big difference, especially if you live in an area with high property taxes. And for those of you who are environmentally conscious, you can get tax breaks for making energy-efficient upgrades to your home. Think solar panels, energy-efficient windows, and insulation. Not only are you saving the planet, but you're also saving money on your taxes. Owning a home is a big responsibility, but it also comes with significant tax advantages. Make sure you're taking advantage of every deduction you're entitled to. Now let's talk about a strategy that's near and dear to my heart, tax loss harvesting. If you invest in the stock market or crypto, this one's for you. It's a savvy way to offset your capital gains and potentially lower your tax bill. Here's how it works. You sell investments that have lost value to offset capital gains you've realized from selling winning investments. This reduces your overall taxable income for the year. It's like turning lemons into lemonade. Now, you might be thinking, but Graham, I don't want to sell my losing investments. What if they bounce back? And that's a valid concern. But here's the thing. You can immediately reinvest that money into similar, but not identical assets. This way, you're staying invested in the market while still reaping the tax benefits. Tax loss harvesting is a powerful strategy, but it's important to consult with a financial advisor or tax professional to make sure it's right for your individual circumstances. They can help you navigate the wash sale rules and make sure you're maximizing your tax savings. Alright, we're on the final lap. By now you're probably feeling overwhelmed with all these tax tips. But trust me, this last one is the easiest and arguably the most important. Stay organized and file early. Throughout the year, keep track of all your important financial documents. This includes receipts for business expenses, charitable donation receipts, medical bills, and anything else you might be able to deduct. Trust me, you don't want to be scrambling for these documents come tax time. Once you have all your ducks in a row, don't wait until the last minute to file your taxes. Filing early gives you more time to catch any errors, avoid late fees, and get your refund faster if you're owed one. There are tons of different tools and resources available to help you stay organized. You can use a simple spreadsheet, a dedicated tax software, or even hire a professional tax preparer. Find a system that works for you and stick to it. Remember, tax season doesn't have to be stressful. By staying organized and filing early, you can make it a breeze. Plus, you'll have peace of mind knowing that you're maximizing your tax savings and keeping more of your hard-earned money. Let's recap. To save money on your taxes in 2025, max out retirement contributions, claim tax credits like the child tax credit, deduct business and home expenses, use HSAs and FSAs for medical savings, offset capital gains with losses, and keep good records and file early. If you follow these steps, you'll keep more of your hard-earned cash. Thanks for watching Mindset Money. If you found this video helpful, don't forget to like, subscribe, and share with someone who needs these tax-saving tips. Stay tuned for more money-making and wealth-building videos. See you in the next one.